Let's welcome on board Dipan Mehta as well and find out what he's making of the market right now. Dipan, hi, afternoon. Just wondering what should be the strategy ahead of not just June 1st, but the big one, June 4th. Do nothing, you would think?
Yeah, good morning, and thank you for having me on your show. I think absolutely be as light as possible, curtail all trading positions, options, futures, everything. Just enjoy the election result and watch all your news channels giving all their comments on what has gone right and what has gone wrong. I think it's best to be relatively light and in cash. The risk return doesn't really favor you. Even if it's a spectacularly good result, you will have opportunities to buy. But if it is a bad Lok Sabha result outcome, you won't get a chance to sell. That I'm certain about. So I just want to go very light into these election seasons. And any positions I'm not sure about, any investments I'm not completely confident about. And now that the earnings season is over and done with, we have a fair greater clarity on the prospects of all the companies. So from that point of view, I think it's better to be cautious. And if the results are good, then you will have the whole year to profit. But if it's bad, exit will be very difficult.
Sure. So, what's been your analysis of the earnings season? Because, I mean, eventually it all is going to boil down to earnings and growth, right? I mean, election is going to be maximum a week or a month long affair. But what's been your reading from earnings? Where is it that you still find value and growth both on the table?
No, I'm not going to answer where I find value and growth just now. We are being cautious, and I come every week. So after the elections are over, we'll see where the market settles, and I'll be more than happy to tell you where there is value and where there is growth. But right now, about the first part of your question about how the earnings season has gone, I think it's been extremely mixed. It's been largely disappointing for all the structural growth stories, the consumption stocks, the concept stocks, retail, entertainment, hospitality, hotels. By and large, those have been a bit disappointing. What has done well is the capex. All capital goods related stocks are done well, be it in defense, be it in railways, be it in infrastructure. That's what has done well. Certain cyclicals and industrials have done pretty well. Wires and cables have done well. So there are a few pockets where we have seen results coming better than what Street was expecting, and order book positions also are looking good over there. But these stocks also have run up. They have been so for the last year or so, and they're pretty fairly valued. I would say slightly overvalued also, considering that essentially these are cyclical businesses, and there could always be a down cycle in the capex. There could be a down cycle in the economy, and that certainly will impact their earnings significantly. So in one way to sum up the election result, the earnings result, is that it's been disappointing for a lot of blue chip structural growth stories, and it's been positive for a lot of cyclicals and industrials. But over there also, the valuation at which these cyclicals and industrials are trading at are at overvaluation or fair valuation range.
And talking about one such cyclical sector which has managed to outperform per se the street expectation has been chemicals and parts. For today, of course, Deepak Fertilizer is reacting to its good numbers, so that stock is trending higher. And Sumitomo Chemicals, since its earnings, that stock also has seen a bit of a re-rating. Osho, what's your view on some of these chemical names? Anything that you would recommend as a buy?
See, from chemical counters, most of the counters have seen a good traction in the recent period. As you have mentioned, Deepak Fertilizers just came out of the result, and after that, the counter have seen a good traction in the buying perspective. So I'm expecting that this can attract buyers. But again, looking at the overall trend in the market, one should better not be very much aggressive for coming two trading sessions. After that, one can definitely find ample amount of opportunities in the market to get hold of many of the counters. But from chemical specialty, Deepak Nitrite, Coromandel, these two counters are looking very positive to me. And even Navin Fluorine is one of the counter which has not performed very well in the recent period, but it is expected to have a very strong reversal in the from short to medium term time frame. So these counters one can definitely keep their eye on.
Pharma, of course, has been one sector that we've been talking about, and as to how that's been showcasing some strength. Dipan, are you looking at any of these names? Divi's, Glenmark, the numbers were good, so was the guidance, and today it's Sun Pharma which is propping up.
Yeah, I think if I can go back to your earlier question, where do you find value and growth? You can add pharma to it. That sector has shaped up very well, and earnings across the board have come very impressive. in a way, it's a defensive sector. So, if there's a issue at the center, or if there's an economic slowdown in India, this is one sector which will continue to do well. There are some positive structural changes which have taken place in US generic market, where competitive intensity has slightly come off. And I think even the compliance level as far as US FDA is concerned has improved a lot with a lot of Indian pharma companies. Valuations are reasonable. They are growing their market share not only in US but rest of the world as well. And domestic healthcare spend remains structurally very strong. So from all points of view, I think pharma has been firing on all cylinders in the March quarter and December quarter as well. And that's one sector I think investors and we ourselves are trying to see ways and means to increase our exposure and our positions over there. The thing about pharma is that there could be earnings volatility and still the US FDA risk factor is there. So it's better to buy them as a basket. As a retail investor, I think buying into a pharma specific thematic fund is a great idea. But if you're going to look at investing directly, I think there's good value in stocks like Sun, Lupin, Dr. Reddy's, Zydus, and Torrent. These are the large 4 or 5 large pharma companies which with a fair degree of exposure to Indian domestic market and exports as well. And I think these companies could do very well. There are a few dark horses as well, smaller companies which we are very positive on, disclosures required over here. So the names which come to mind are Kaplan Point, Ajanta Pharma, and IPCA. IPCA and Ajanta Pharma, I think they can significantly grow their US business. That's where they're focusing on. And Kaplan Point also has got some very interesting approvals in the US market. And their position in the Latin American market is really their USP and offers a significant moat when it comes to generating the growth results going forward.
So those are a whole host of ideas coming in from the pharma sector, but perhaps for people who don't have that much time to research and perhaps look into each of the companies specifically, maybe basket buying is not a bad idea in the pharma sector. IPCA Lab incidentally just reported numbers a few hours ago, and it was a decent show, at least on the revenue front, because the revenue was up 35%, even though the net profit slipped as much as 22% year on year. But let me take it across to Shrishti and get a sense as to what should be the expectations from Apollo Hospitals come tomorrow. Shrishti, what are the numbers that Street are expecting?
So a decent set is expected from Apollo Hospital this time around, because on a sequential basis we are expecting just the flattish growth for the company, while on a YOY basis there could be a double-digit growth across the numbers. Why so a flattish growth we are expecting? Because on the occupancy level, the ARPOB numbers, we are not expecting a significant jump over there, and that could contribute to the numbers. So firstly, onto the revenue figure, we are expecting 4,907 crores in the top line. EBITDA is expected at 626 crores, and the margins are also expected to be flat sequentially at 12.8%. And lastly, onto the profit figure, 253 crores is what we are expecting. Now looking at the factors at play, then the growth in the ARPOB as well as their healthcare operations could boost the earnings this time around. But other than that, the primary care and the diagnostics is also expected to support the earnings on the back of a better operational performance. If we talk about their hospital business, that is expected to show a growth of 13% on a YY basis, but the hospital margins are expected to be down about 20 basis points on a sequential basis. The occupancy is also expected to remain flat sequentially at 66% this time around, while their AHLL business is expected to report a 20% growth on a YOY basis. So not a great set expected from Apollo Hospitals, but apart from that, from the management commentary, we will be definitely watching out for the updates on the capacity expansions at their Pune, Hyderabad as well as their Kolkata and Bengaluru facility, and how some of the newly added capacities are helping into the numbers. So all eyes on Apollo Hospitals.
Okay, that's Apollo Hospitals as well as Tata Steel, both slated to come out with their numbers today. But let's get in some BTST trades as well on that note. Osho, what's on your list?
See, from BTST perspective, there are two counters which I have already shared. One is Torrent Power and the other one is GE Shipping. So GE Shipping is still looking very positive, and one should definitely try to gauge momentum in this counter. Another counter which is looking positive is General Insurance. GICRE is the script name. It is looking very positive. In the last 4 trading sessions after the breakout, the counter have seen a decent correction and is approximately hovering around the neckline. So from here onwards, there can be a decent up move in this counter. Currently, it is hovering near the zone of 355, And on the higher end, I am expecting just for a BTST target 362, but 380 is the positional target for GICRE. While on the lower end, 342 should be kept as the stop loss.
What about your BTST trades?
So I'll look at Dr. Reddy as a contra buy at current levels of 6,000 approximately. It looks attractive in the sense that many of the pharma stocks have come back to their previous swing highs. This stock has been an underperformer, so there could be a bout of the covering up of the underperformance for the stock over the near term. 6,200 as an immediate target for Dr. Reddy and stop loss at 5,900. And in the same way, Piramal Enterprise is something which is coming back into the volumes radar. At least the last 10 days, the stock is out of the last 10 days, the stock has clocked one of the higher volumes for itself, and it's come back towards a breakout point closer to 840 mark. So would suggest a buy with a target of 870, stop loss at 800.
Okay, so those are the top BTSC trades coming in from our charters, but let's shift focus a bit and get you an exclusive voice on the show. Nasina Nagarajan of United Spirits, or rather Diageo India, spoke with us earlier talking about how the earnings have been, but more importantly, what lies ahead for the company given the overall momentum on the ground. Listen into a slice of that conversation.
So, I mean, let me talk the longer term demand scenario, right? I think if you look at the macroeconomics, if you look at the level of affluence, if you look at the fact that, you'll have 175 million households in mid to upper income over the next 5 years. If you look at the demographics of our population, right? So, India will produce 25% of the legal drinking age population over the next 5 years, right? Combine that with relatively low penetrations, 30% versus a country like US, which is 60-70. Per capita consumption, which is 2.4 liters versus the US at 7.2. I think the industry will grow. Right, and we are confident in the growth of the industry. Also, I think we are so important to the government exchequer in terms of our revenue that I think we will be supported, right, in whichever ways, despite the regulatory impacts on pricing. So we are optimistic, and our portfolio, we have, as you know, fantastic global brands, Johnnie Walker, Singleton, Talisker. We have great local jewels, McDowell's, Royal Challenge. We are innovating, Royal Challenge, American Pride. We've got Godawan, right? So we think we have a fantastic portfolio that will cater to the consumer across the price ladder. And we have a very future-back approach. So we will continue to innovate to meet their needs. Repertoire drinking, we've got Hapusha, we've got, Tanqueray Gin, we've now got Don Julio tequila into the country. So we are very optimistic. We think our strategy is working. Shorter term, there is a moderation in growth and there is inflationary impact. Versus previous years, I think inflation on a number of the raw materials has cooled off. So glass, which is one of our biggest, glass is now stable and we expect it to be stable. ENA, we still expect to be inflationary, but we have a huge productivity muscle, and using pricing, mix and productivity, we feel that we will be able to deliver our guideline of both double-digit top-line growth and mid to high-teen margins.
Also, speaking about the premiumization trend that's been holding strong in several sectors and in this sector as well, can you give us some indication of what kind of a growth is it going to really unleash for the sector going forward, and of course the entry level segment?
Look, I think there is an opportunity for premiumization across the ladder, right? So even if you look at the lower sector, you've got country liquor and popular, which upgrade to lower prestige, and then the upgrade happens to the other segments in prestige. And for the last few years, I mean, if you look at between, say, 2017 and 22, the upper end was growing more than 20%, the middle end was growing high teens, and the lower end was growing single digits, right? Now, while that has moderated in the short term, we know that this industry is very resilient. And the good news in our industry is that people do not downtrade. Right? What we see for our brands is they're not downtrading. What they're doing is they're managing the wallet by reducing the number of drinking occasions. So the moment the consumer comes out of this pressure, they will go back to their normal behavior. So we feel, again, pretty optimistic that we will continue to see this premiumization.
Okay, that's the word coming in from the Diageo India head, talking about what possibly could be the growth, not just for Diageo, but particularly the liquor sector itself in the next 5 to 10 years. And Kunal, what's the best way to play that growth, via USL or Radico Khaitan?
I think I'll be bullish on Radico more because I think that's a relatively high beta space. So, it's a very small sector relatively, and within that pack, I think USL, United Spirits, has been a very low to moderate beta kind of a stock. In fact, it took almost 6 months to 1 year, more than 1 year, in fact, for the stock to break past about the 1,000 plus mark, and in that time span after that 1 year of consolidation, the stock has just given returns of 15 to 20% so far, as compared to many of the other peers like Radico, for example. The stock had remained to a consolidation around the 1100 to 1200 mark, and the stock is now almost at 1600 plus level. So the relative beta for the stock is far more better. So if you're betting on the a sector like this, I would probably go with a high beta name. Radico is something which looks attractive. Even I think Som Distilleries, the stock which has come back, I think after a split or some kind of a corporate action, I think it's come back towards the 125, 130, very critical support. It looks very attractive for a potential target of 150 to 160 at least.
Okay, so that's a take on the entire alcobev industry. But I've also wanted your take, Dipan, regarding the wind energy sector and the renewable energy transition play, because this morning Nuvama came out with a note on Suzlon as well as Inox Wind, and they've initiated coverage on both with a decent amount of upside, saying that there's no other way than for these markets to actually grow, that is the wind energy market. What would be your top bet within the power sector, and if at all you're playing this energy transition theme somehow?
Oh, I think it's a great long-term story. Clearly, we are going to be setting up more and more wind farms in this country, and wind, solar, and thermal are going to coexist for many, many decades. That's becoming more and more clear. More importantly, I think demand for electricity is moving up very nicely, thanks to urbanization, thanks to increased uh, setting up of data centers, industrial activity, and also overall increased use of appliances. So electricity consumption is gradually growing up in terms of volume, and there's still need for not only setting up new capacity, but replacing existing capacity as well. Within the wind energy itself, I think there's scope for replacement of existing wind farm which was set up maybe 5, 10, 15 years ago as well. So long-term prospects are great. I think both companies, Inox Wind and Suzlon, both listed companies, have a very good future. They are sitting on massive order book position as well. But as I said earlier in the show, I think that the valuations is a bit of a concern area. Maybe at correction, 15, 20%, 30% correction, these stocks would have some amount of margin of safety and offer a better risk return profile.
Point taken. Thanks, Dipan, for making time and speaking with us today.
If you like this video, then like, share and subscribe to ET Now.